Global stocks continue to relentlessly hit new highs, and the risk-on rally will probably persist into the year end. That's provided we keep seeing better than expected economic news, as we have been. I'm Jessica Amir, a market strategist with Mumu. You're watching The Daily. Thanks for tuning in. Note that stocks generally gain momentum ahead of Black Friday and Cyber Monday sales, so that also supports a risk-on sentiment. But speaking of risk-on sentiment, we've seen a bit of risk-off. Bitcoin has stalled for 2 days. It's now back at $97,000, but bets do remain strong for Bitcoin to still hit $100,000. What else do you need to know? Well, in the US last week, we saw the S&P 500 rise almost 2%. The Nasdaq 100 at 1.9%, while the small cap index, the Russell 2000, well, that really outperformed. It rose 4.4%. Now, this basically suggests that investors are feeling pretty bullish and aggressive, and they're ready to take on more risk. And I guess sentiment was further boosted on Friday when we saw US jobless claims come out weaker than expected. And then we also had the president-elect Donald Trump appoint a pro-Wall Street hedge fund executive as Treasury Secretary. So investors liked hearing that, because the guy that he's appointed to the head job knows about the stock market, and he's also pro-crypto as well. Closer to home, Australia's ASX 200 rose 1.3% last week. It hit a brand new record all-time high. So should you invest in Australia's market now, given that we might continue to see record highs ahead? Well, the answer for me is yes. The Aussie share market will probably keep moving up for the rest of the year for a couple of key reasons. But we've also got commodity prices that are trending higher as well, and this is supporting the ASX. Remember last week, the gold price rose 6%, iron ore rose 4%, and that's because the demand narrative for industrial metals from China is improving, and that's supporting iron ore prices move higher, and also Australia's biggest companies. But gold will probably keep hitting new record all-time highs, and it will probably push back to those levels. That's because we've got geopolitical tensions starting to pick up, and now everyone's concerned about debt levels picking up ahead of Trump's inauguration. Also consider the stocks that were the best performers last week were uranium-focused companies. In the US, we saw that. Vistra, Constellation Energy, their shares rose 11% each, and they're some of this year's best performers in the US. Now, why are uranium stocks now all of a sudden picking up again? Well, we've got to have Russia coming out, and they've taken supply out of the market. Plus, we've also got demand rising for uranium. We've seen that with Amazon and Google. They're still in early stages of really ramping up uranium demand. On the ASX, uranium stocks such as Paladin and Deep Yellow, they also followed suit. They rose 10% last week. Now, my sense here is that you do want to keep your eye on uranium companies, but also gold and other industrial metals. They'll probably continue to drive gains further and support that broad share market rally that we have been speaking about and highlighting for some time. Now, Australia's share market is expected to have another cracking week and search for new record all-time highs this week. The futures were earlier suggesting a gain of 0.6%, but do keep an eye on small companies this week, and that's because we've got Australian bond yields moving lower. Remember that when bond yields typically fall, that means that stocks can move higher. Also, keep an eye on gold, silver, nickel, and oil companies, because their respective commodity prices are moving higher. Really worthwhile noting that silver and gold prices rose the most on Friday, rising about 2%. And that's The Daily.